Hello and welcome to Tech Talk, the Bankers video series looking at the emerging technology trends and fintech disruptors. I'm Joy Macknight, technology editor at The Banker, and I'm joined by Oliver Bussmann, who's president of the Crypto Valley Association, to discuss cryptocurrencies, ICOs, and digital transformation. Oliver, thanks so much for joining us today.
Thanks so much for having me.
Can you tell me a little bit about cryptocurrencies and how they're going to disrupt the financial services industry?
I think the cryptocurrency business is it's a growing business. So we are talking about, depending on the volatility in the marketplace, between right now the top was 180 billion market cap of the top 100 currencies or tokens at the end. So startups use this now as a way, the next digital way of crowdfunding to issue tokens. It's almost like a virtual stock. And because it's a global platform, you tap into a capital pool that is not only limited to a VC company, and also the issuing of a token is a very efficient way. The cost in doing it is significantly lower if you do this in a traditional IPO environment.
Okay, well that's the thing. Everything's shifting to ICOs, initial coin offerings. Yeah. Can you tell me a little bit about what that is, and then also why it's so popular right now?
Yeah, the initial coin offering, or as we say in the Crypto Valley, which is the greater Zurich area, with all the startups, the legal expertise, the pro-business mindset of the regulator, etc. So you at the end have access to capital in issuing a token. And token can be to do business with the company. It's almost like a currency. It can be also an equity part. You own part of the business. And in doing this, it's almost like a kind of Bitcoin that you issue, which is at the end a combination of numbers that you own, and at the end the ownership is then you inject a cryptocurrency like a Ether or Bitcoin, and in return you get those kind of tokens, ownership or a currency that you can invest, or you can use it to buy some services from those kind of companies.
Okay, and it's so popular, why?
As I said before, you tap into a pool of capital that usually in the past was limited. That's definitely a way that, usually as a startup in the early stage, you have to go to VCs, you pitch, and so you have to network. It takes time. Here you offer this, you write a white paper, so it's almost like in the IPO business, you publish your business model, the way how you want to do business, explain the technology. You find a company that helps you to issue those tokens. So there's a technical part that has to be secure, has to be protected. And there are then also a KYC utility, known your client, because you get also fiat currency and it has to be exchanged in those things. So that has to be managed in a professional way. This is the reason why we see a demand for that skyrocketing. So last year, limited funding through that. Now 70% of blockchain startups are getting funding through these token-generated events instead of almost 100% through VCs. So there's a shift within a short period of time.
But are there specific challenges to doing that?
Yeah, challenges is you have to be in the regulatory framework. So there are countries that have a different definition of security, like in Switzerland. They're a little bit more liberal than the US. But I think you need legal advice how to set up this kind of token-generated events. You need tax advice, how you put this out there. You need technical expertise, a platform that can issue the token and has to be bulletproof, because there's a lot of cyber attacks out there. You need a KYC utility that helps you to exchange the currencies. So there is an effort, but in the Crypto Valley there are now expertise out there. This is the reason why around about $600 million US in capital raised in the last few months out of that ecosystem, and there is another, I would say 70 ICO or token generated events in the pipeline for the next few weeks.
Wow. Okay. And putting on another of your hats, you're also founder and CEO of your own digital transformation advisory company. What would be sort of the main advice that you could give for banks that are going on that digital transformation journey?
First of all, I think to understand this digital disruption. So because it's understanding, what's the potential of those new technologies. It's blockchain, it's the Internet of Things, it's AI. So understanding what is the implication on their business, because with the blockchain, the business model will change. So you don't have the middleman anymore in place. So that has an implication on how you do business. There will be new ecosystems coming up that leverage the new technology, like the whole mobility space that will have a unique experience from traveling from A to B, that you have all the different kinds of transportation that you can do through smart contracts, for example. So what my advice to the business is, you have to run disruption like part of your business development. It's not like putting an innovation lab there, putting an innovation team there, and they are disconnected and not part of what is possible out there. How does it fit with my strategy and my priorities, and enable them very in a focused way, in a selective way, to see how is the impact on the product and service side, and then you implement. So, from my perspective, it needs an ongoing revisit of those trends, part of your business development, because I saw a lot of companies missing that early stage of the blockchain. There is at least every year between 700 and I expect this year at least $1 billion more investment into startups in the blockchain arena. So it needs an active involvement and ownership of that, especially as we said, as McKinsey said, around about 12 to even more ecosystem will build up, B2C, B2B, mobility, that will blur the lines of industries. So that is maybe no short-term impact, but if you don't have the capabilities and talents to respond and drive that, you can be in a very defensive mode 2-3 years down the road.
Okay, great. Thank you so much, Oliver.
Thank you.